Um, Hi, everybody. My name is Teresa, and I am the project lead of the Space Investment Program. Thank you all for joining us. I would like to welcome you to our first webinar, part of the investment readiness process. At this webinar, you will get information about the investment landscape in Europe, and I would like you to remember to register for the coming webinars. Next Thursday, the 19th, we will run the webinar Top Reasons for Investment, the team, Top Reasons for Failure, the team, by Paul Gillespie from Guillermo Stevens. And the last Thursday of the month, on the 26th, also at 4 p.m. Central European Time, you can join our last webinar that will help you on how to prepare your investor speech by Mark Wilson from Strategic Technology Bioconsulting. Before starting with the webinar, I would like to share a few housekeeping rules for making the session as smoother as possible. Please be aware that we are recording the session. If any of you disagree with that, please write me a message. It can be on the chat, and we will remove you from the recording. Please rename yourself with your name, surname, and company name. And it's always preferred to see you. So please turn on your cameras as far as the internet connection allows it. Then for a better communication, we kindly ask you to turn off your microphone and to reach your voice after the presentation. Yusef will let you know when it's time for Q&A, so you can unmute yourselves at that point. Remember that the chat will be active all session and that you can use it anytime to reach questions to Yusef, myself, or even other CEOs in the room. And with all this information said, I will not take more time to introduce you to Yusef Sabah, our great expert on the on innovation programs from TechTour. Hi, Yusef, the floor is yours.
Thank you, Teresa, for this introduction to the webinar, and welcome everyone to this webinar. I wanted just to say one thing about the housekeeping rules. Although we ask you, we say that there are two slots for questions and answers. Feel free to send your questions anytime you have them in the chat, and we will take them when we open the Q&A session. So a few words about myself. My name is Youssef Sabah. I'm Innovation Lead Manager at Tech2 Europe. Tech2 Europe is based in Belgium and is part of the Tech2 group with another office in Bulgaria. Tech2, usually our core business is to connect the most active corporates and investors with selected entrepreneurs across Europe, across sectors, across stages, development stages of companies. And we do that through online programs and physical events. But nowadays, with COVID, physical events are not possible. And we bring together the entrepreneurs with the corporates and investors to discuss potential deals and drive their innovation. I am managing all our EU-funded projects, including Go2Space hubs, including Point IoT, InnoRate project, which are linked to this and the next upcoming activities. About the Tech2 Space Investment Program, the program is there to help you, entrepreneurs, startups, developing technology solution in space sector, and or using satellite-based data to boost your business model. We are here to help you to improve your investment readiness, to understand the investment stages, the investment process in companies, and we are here to help you to build relations with investors and hopefully come to deals with them at the end of the day. So as part of this program, there is a series of webinars. This is the first one of this series. There will be three different webinars, once every Thursday until the end of November. Then all the companies who have applied, there is a selection process, and a number of companies will be selected to actually attend and have an opportunity to pitch in front of coaches and get feedback from the coaches on improving their pitches. This will happen in December. And at the end of the program, there will be an investment matchmaking event, which will happen online on 17 December. And at this event, the selected companies will have the opportunity to pitch not in front of coaches, but in front of investors. And we'll have the opportunity also to pre-arrange one-to-one meetings with those investors and to discuss potential collaborations with them. So this program is done in collaboration with several projects, one of them being Go to Space Hubs, Copernicus Accelerator, and Point IoT. All three programs are organizing acceleration and incubation programs, so supporting companies actually to improve their business model and to come at the end of the day with a product which is ready for market. The next project is InnoRate. It's a platform allowing to rate technologies. Basically, it helps you doing an assessment of your technology and get a report on the screening. And there are matchmaking activities which are organized by the project, and the investment matchmaking event is organized under this banner. In terms of content of this webinar, I propose the following content. So first, to present the types of investments which are suitable for each of company life cycle stage. Then to give some tips on how to identify and benefit from some investment opportunities. Then we go for a short Q&A slot. And after that, we go to the investment landscape. Although Teresa mentioned investment landscape in Europe, I think it's broader than Europe. There are a few things which are related to Europe, but investors in Europe invest in the US, investors in the US invest in Europe. So it will be a rather investment landscape. We will talk about some barriers and some needs for access to finance for startups. Then we will look at the global investment landscape, and then we will analyze some of the recent investment deals which were done in Europe in the space industry. And then at the end of the webinar, we will have another Q&A session related to the second part of the webinar. So first part, routes for investments. First of all, I wanted to make sure that everyone knows or everyone is aware about the company development stages, because the type of investment that you will be looking for depends a bit on the stage where you are. And I'm not sure if everyone is in the same stage, if we have more companies in the very early stage or in expansion phase or later stages, but I guess most of you are in either early phase or in expansion phase. So first of all, this is a kind of typical company development stage. So in reality, it might be a little bit different. It might be, you might not notice in which stage you are, but basically when you create, when you start, very often you don't even have a company, or you have a company, but you don't have a product, or you don't have, you are still looking at what is your idea, what is your business, what will be your business model, what will be your market. So you are at the very seed or very early stage. where you are not making any revenue, you are not making any, you have the revenues here, typical. So you are not making any revenues, not making any sale, you don't have a product yet, but you have costs and you have, you need some money, you need some funding. Then the next stage where you have passed this idea, business analysis, you go into the next stage where basically you are looking at, you either created your company and you are about to think how to adopt your product to the market, or to improve it, or um, uh, to adopt it to certain use cases, or at least to make your product ready for the market. And then the next stage is about the first stage where actually VCs might be interested in you, where you start you start production of your product, or you bring it to the market with first sales or first customers, and there you can demonstrate a little bit that you are starting to make some revenues, up to the point where you cross, okay, your costs are lower than your revenues, and you start making profit. Then you enter in the next phase, which is expansion. Now you look at, how can I grow? Growing means getting more market shares, being the market leader, scaling up basically. And the next phase, the next step in this phase is, okay, how you can scale up a little bit faster, or a little bit more internationalization, standardization, and these kind of activities, up to you are making a lot of revenues and you go to IPO, or you get acquired by a bigger group or other companies. So there are multiple stages in the company life cycle. At each stage, you have different challenges, you have different types of costs, you have different types of funding needs, and more specifically, different amounts probably. And you require access to funding at all these stages. But there are some funding schemes, or some types of funding which are more suited to one stage rather than the other. So first, before jumping into this, let's talk about the types of investment. You don't need to take note. I'm not going to read all that, but I'm going to say the main things. First of all, I'm not going to talk about grants, which everyone knows. I'm not going to talk about your own money, of course, and your family and your friends, which is also a way to get funding. I'm going to talk about the private ways, the ways to get private funding. So first of all, business angels. Business angels are uh, individuals. So they are private individuals. They are working under their own name. They are not working under a fund or whatever. They invest in companies in equity, so taking some shares in your company. And typically they invest at early stage companies, when the company is still don't know where they are going, or the roadmap is not very clear. They are very often successful entrepreneurs with they have sold the company and they got money, and then they're investing and they are helping other entrepreneurs. And what they bring in the company is very often the money and coaching and knowledge to help you as entrepreneur do your first step. These type of investors, the business angels, how do you find them, or how do you reach out to them? Basically, you can contact angel business networks, and there are two main business angel networks in Europe. You have IBAN and Business Angels Europe, but these are network of business angels networks. So their members are often networks of business angels. So when you go there, you see who are the members. You will find who is close to you or who is member, and how you can contact to them. But the best would be if you can, let's say, find someone to introduce you to these business angels. Um, It is important when you look at a business angel, for example, to see who has experience in your industry, because as I mentioned, they bring money, but they also bring knowledge about the industry, about the business models, about how you can improve and go to the next step. Typically, the amounts they invest in companies is from 50,000 to half a million. Very often they invest together with other business angels. So let's say if you get an investment of 200,000, maybe it is 3 or 4 business angels putting money together to share the risk or to dilute a little bit the risk. Venture capital firms, it's not individuals anymore. It's they invest in equity, but they manage funds coming from different sources. And they start investing in companies when the company has some tractions, when you can demonstrate that you have some traction, that you can demonstrate that you have clear ideas where you are going, and you are giving them a little bit of confidence that they make an investment in a winning, let's say, a winning investment. Um, they do not invest their own money, as I already mentioned. They manage funds which are coming from other people, which they put together, and they manage these funds. The VCs, very often they focus on specific industries, and more often they also have geographic scope. And even when they claim that they are international, when you look at their portfolio, very often it is in 1, 2, 3 countries. And you can understand when you look at the portfolio companies, where, in which industries, what type of investments they make, in which countries they are interested in. It can help you when you are looking for investors to understand um, uh, which investor is, let's say, investing in your industry or in your country or in the type of company you are before you approach them. It doesn't make sense to approach an investor when you know that, well, it's not the right match, or it's going to be no. I don't do this type of investment. Um, they are usually easy to be contacted. They have a website. You can go through their website. You have all their portfolio. You have the exits they have done, and you may gather as much information as you want. You have the people managing the fund. You can contact them directly from there. But the thing is, how do you identify them? um, they receive a lot of requests, and they invest only in opportunities that they find relevant and interesting for them. So you need to make sure when you contact someone that you fit in their target. You let's say, put all the chances on your side, and have a strong proposal for them. Typically, VCs, venture capital firms, they invest from somewhere between half a million to several tens of millions. And yes, you have to understand what is the typical size of investment they usually do. When you analyze one investor, you can probably very often understand this from the past investments they have done, or from the website. Very often they give an indication. They invest from somewhere between half a million to several tens of millions. But when we start looking at venture capital rounds, it is structured in several stages. You have the seed rounds, which are rather more from half million to 2, 3, 4 millions. You have then Series A between 3, 4 millions to up to 10, or I mean, it's not really strictly defined, but it depends on the industry. It depends on some considerations. But you move from one round type of rounds to another. So seed, round A, round B, round C, and you can even go to later, where it is even higher than these 10 millions. But very often, either they invest alone, or they invest together with others, co-investing with other investors or other types of investors too. Private equity firms, They manage funds or capital which is coming from big institutional investors or high net worth individuals, which are rich families. They have made a lot of money and they try to invest this money in innovation. And what they do is they acquire also equity like business angels and venture capitals. So they get some ownership of the company, and they have several strategies like buyouts, like same than venture capital, and they operate on more long-term investment horizons. And very often, when they invest in a company, it is because they want to restructure this company and sell it later on. As you can imagine, private equity firms, they invest at later stage rounds, and typically starting from 5 million to even sometimes it goes to billions. But they need to have, let's say, evidence that the company has gone beyond generating revenues. You are really advanced in an advanced stage. You are making profits, you are making margins, you have some kind of stable cash flow, and then they will try to acquire a controlling or a big part of the minority position, just because they want to maximize the value of their investments. So they want to be able to decide how to restructure the company or how to bring the company to the next level and make money on the big investments they have done. And very often what they try to do is either bring the company to an IPO or bring it to a merger with another company or recapitalize the company. Venture debt. It is a fund which is it is managed either like a VC by a VC, but or a technology bank. And usually, what they do is investing in debt. So they give you loans, and you pay back the loan later on with some interest rates. And they try to do that in a bit later stage, not too early stage where you don't have any proof of your financials or any proof of where you are going. You cannot demonstrate where you are going. Family office is a special kind of fund. They manage fund from wealthy families, and they are flexible in the type of investments. Very often they go from grants. They give grants, just they give away without getting back anything from the company, or sometimes they invest in equity investments, and it can be it can be sometimes early stage, sometimes late stage. It depends really on the fund. And it is important to get introduced to these ones, because I don't see, they don't have usually a website, they don't usually have information published, and it's not easy to know them. So someone tells you about them and introduces you to them. Then convertible loans and mezzanine financing, it's solutions that are offering either a loan or a hybrid between debt and equity, with the potential to convert later on the loan into equity, or keep it with an interest rate that is depending on the success of the company. So it is a scheme that they try to mix between debt and equity. Of course, beside these types of investments, you have also other types of investments. Crowdfunding. Crowdfunding, you all heard about crowdfunding. You all know what crowdfunding is. It is online. It is you have platforms where you publish a crowdfunding campaign and you get something in return. But there are basically three types of campaigns. One of them is a reward-based crowdfunding, where you are making a product and you announce this product via a campaign, and you get early clients who pay for the product, so that you have cash and you can work with this cash. And later on, when your product is ready, you can deliver it to your clients. In the crowdfunding, you have also crowd lending. It is people who will put money, who will invest some money, who will lend you some money. It's like debt financing, but it's crowd by many people on the on crowdfunding platform, and they will get they will receive later on their money plus interest after the time that is agreed for this type of investment. But there is also equity crowdfunding. It is like VCs and like business angels. They will just invest in your company, but through a um, uh, crowdfunding platform. There are also peer-to-peer lending or business lending. You are not borrowing from a financial institution, but rather from an individual or group of individuals who are willing to give you a loan and get it back. There are some P2P lending websites who connect you directly with the people who have the money and are willing to lend it to you. It works like a loan, but it is faster than a loan because it gets less time to look at your financials, to less time to look at. It is very often based on algorithms and very automatic to come back to you. So a little bit faster than the loans. Of course, there is leasing and invoice trading, where it is quick solutions for companies when you want to finance a product, um, and you put the product as a collateral, and then when you sell the product, you reimburse the lease based on the invoice. So the company invoices directly your clients and gets their money. But in the meantime, you get in advance your money and you can work with it. You can continue developing your products. Of course, as I mentioned, this is not exhaustive. You have many other types of financing. Um, um, you have grants, you have subsidies, you have incubators who very often provide you with the support and sometimes with a little bit of money. It depends on what is your need. And we have not talked about investment banks, national promotional banks, who probably provide guarantees, who probably provide also venture schemes or debt schemes, or a mix of all that. But they are there to help companies or successful companies in their ecosystem or in their country to succeed. And of course, there are schemes which are coming from the EC, like the European Innovation Council, where you can mix between a grant, you request a grant, but you also mix with venture capital funding, where they will accept you, they will accept the grant, and they will also accept an investment on top of that. So there are also schemes from the EIB, the EIF, where it goes along all these lines, and you have to look at their website to see what they do in your sector, if they have a specific fund or if they have a specific scheme. Now, coming back to the phases, to the development phases, and to which investment types are suitable to each of the stages. So at the beginning, where you have nothing, you don't have a product, you don't even have your idea, which is mature, it is basically entrepreneurs, you, your friends, your family. You can count sometimes on subsidies, sometimes on a local level or regional level, or on your national level. You have schemes to incentivize entrepreneurs at very early stage. Um, Business angels sometimes take risk in this phase and provide small amounts of funding. Of course, they will not go for the larger ticket of 500,000 or more, but they will go for smaller amounts because they are taking risks. And as I already mentioned, incubators sometimes provide you some resources. It can be office space, it can be a small amount of money to incentivize you in this phase. And the more you go towards the end of the early early stage phase, where you go to the stage where your product is ready, where you go to the stage where your product comes to the market. We start seeing early stage venture capital funds who start investing because they see now that you are clear where you are going, you are soon going to the market. So they take some steps there, and they take, let's say, some actions, and they start investing at this stage. Of course, incubators stay active at this stage. And business angels, I mentioned small tickets, I mentioned larger tickets. So they still active at this stage. And you have another kind of investors, which are strategic investors. Strategic investors. These investors are usually not investing in the company to get return in terms of financial returns. They are investing just to understand what is going on, probably to share IP or to test some processes, and very often it is corporates who want to learn from what a smaller company is doing. So this is on the early stage phase. On the expansion stage phase, there you have the venture capital. I mentioned that venture capital was from very small amounts, for them, less than $1 million to several tens of millions. And very often it goes there. For the later stages in this expansion phase, you have private equity, mezzanine, of course, loans. Loans come across several of these stages. When you start, you can show that you have balance sheet, and you have revenues, and you have something that goes to the market. Then banks start looking at your business. And of course, subsidies stay valid there, because you may have subsidies from your regions if they want to push let's say the industry in which you are active. They will find a way to encourage you. And later, of course, we are talking about you are becoming very successful, and either you are going to IPO or you are going but there you work with investment banks, you work with advisors and experts for these rounds. So identifying and benefiting from available investment opportunities. I think whatever the stage you are in, and whatever the path you want to take, or what type of investment you are going to look for, even being grants or being subsidies or being private capital, you need to plan well ahead, because I mean it's not because you want money tomorrow that you will get it tomorrow. You need to plan these kind of things. You need to do your homework. You need to understand your industry, what is going on, who is doing what, and of course, you need to plan it. And in general, when you start looking for funding, sometimes you are lucky and you get it very soon, in 2, 3, 4 months, but very often it takes longer than that. So the time that you understand what you want to do, and who you want to contact, and how to approach them, and what you have to prepare to be ready to discuss with them, or to convince them, all this takes time. So whatever you want to do, first you need to identify the right routes, or the right types of funding, to see which ones are relevant for your specific case. You need to identify funding providers, or who is providing funding in these specific routes, or in these specific types of applications or verticals, and to understand how to approach them. Understanding who is active in your industry, you need to do some research. You need to look at a few things. We will come in the second part what we did ourselves, but it can maybe inspire you. Basically, looking at your competition who is investing, looking at similar companies who is investing, looking at events, for example, who is investing. And you need to be ready at any time when you have an opportunity, or when someone tells you, for example, well, this investor might be interested in you. You need to be ready. You need to have a pitch deck. You need to have a business plan if the investor asks for it, and you need to have some additional material. This said, I have two slides here, one about the public funding schemes and one for the private funding schemes. About the public funding scheme, mostly it is EC grants, it is agencies which are very close to the EC, like Eurostars, like EIT, like those agencies who are very close, or kind of public-private partnerships. And you have some national opportunities on national level, because there are schemes on EC level, but there are schemes also for each country. Each country is doing actions in sectors that they believe will improve their economy. They establish accelerators, they establish incubators. You have the EIB, the EIF, all these provide some kind of public funding, being it in grants, in subsidies. EIB, EIF, they have several schemes, like guarantees, like ventures. Very often they do that through intermediaries. And what you could do to open up opportunities or to find opportunities is first to watch the websites where information is provided on these opportunities. Like for the EC, it's to watch the EC funding portal, or the tenders portal, where tenders are published, where calls for proposals, because the EC does not just provide money like this. They publish an opportunity, and it's a call for proposals, and you make a proposal, either alone in certain schemes or in consortium with other partners in some other schemes. And of course, you have to read the documentation. You have to read what is required, who can apply, what is the ideal funding, how it works, and all this you have to read and to understand. But first point is to identify an opportunity, and then you start from there to see how you bring it further. And I would say it's the same for EC calls, for Eurostars. You start by researching on their website, or you start by researching in what they call work programs, because they plan several years ahead, and they publish what they call work programs, including a list of calls and description of these calls, and what is the budget that is allocated to these calls. And unfortunately, for the next multi years work program, not that many are out yet, because they are still discussing budget. But I guess it will come soon, and we will know for the next 2 years at least what will be in the pipeline. So that's the first entry. Look at the websites, look at information in the work programs, look at what is relevant for you, and start planning for it. It requires time, it requires resources, but you have to do that, and to identify the real opportunities where it's not just money that you get. It will allow you to go to the next step, for example. If you are not familiar, what happens very often is to work with advisors, or to work with what the EC calls national contact points, who can advise you on okay, this can be for you. They can advise you on the different types of projects. Every country has every country, and not every country, every region has a national contact point. If you look national contact point, I'm sure you will find something on internet, a phone number, an email where you can contact to ask for information. And of course, when you identify an opportunity, you have to follow defined the procedure which is defined for this call. And here, I would advise not to underestimate the required paperwork. It requires a lot of work. If you do a proposal, it's 50 pages, but depending on the type of proposal, sometimes it's 10 pages, sometimes it's 30, sometimes it's 50, sometimes it's more. but it requires a lot of work. It requires exchanging with partners if it is a consortium. Now, there is another thing, which is national grants or subsidies or any other schemes that are available on the national level. We cannot list or we cannot understand all the opportunities which are out there. But I would advise just to ask an innovation agency which is in your region or in your vertical, and I'm sure they will be able to help you or to tell you that this would help you, or why don't you look at this specific opportunity. Um, then another thing is about the EIB, EIF. They have funding from the Commission. They invest, but very often not directly in companies, but they invest or they invest through intermediaries. For example, they try to create funds with investors, and these funds are, let's say, um, uh, these funds invest in companies. And again, you can find the list of intermediaries on their website, and you can find all the information on the different schemes on their websites. From equity funding, for example, I already mentioned what you have to do. You have to do your homework, find who is investing in your area, what types of investments, what kind of business models, by analyzing their portfolio companies, for example, or by analyzing information that is out there. The Where you can find them, I would say investment events. Very often you can look at the list of participants. You can find who is investor in that. You have the previous deals databases like D-Room, like TechCrunch, like PitchBook. They all provide information about what investments happened in the past years. If you look at companies similar to you or companies in the same sector than you might identify some investors. Very often direct contacts are better to seek for introduction to them, or another way is to attend events where they are. Few questions. Um,
I see that we have questions into the chat, Joseph, so maybe we
yes.
can start from Marco.
Well, venture debt is like a loan, but it can be provided by a bank. It can be provided by an investor who is not a bank, but actually it is the same. If they provide you a loan, they will receive their money, and they will receive an interest on the money. With investors, sometimes you can discuss some other options at the end to convert it to something else. But it is almost the same. That's why I put banks and investors together. Is there a difference between mezzanine and convertible loan? Yes, but to be honest, I don't know it.
Okay, thank you.
There should be a difference, but
Yes, I was just thinking it's very similar, and also in the graph with the different stages of finance need and sources, it was placed in the more later stages, whereas I think a convertible loan can be also in early stage. So that's why I was wondering if there was a difference or not. But I'll look it up on the internet.
Thank you. Then strategic investors. I mentioned that usually it is investors who are not looking necessarily for financial return. They're looking for something else. Sometimes they want to know where technology is going. Sometimes they want to be let's say it's win-win situation with you when it is corporates, for example. They want to learn if certain technology can work so that they can integrate it. And I don't know how the deal can end up. Maybe they can license your technology, or they can help you bring it to the next step against some, let's say, some benefit that they have. But of course, all this is discussed, what they want to get out and what you can give out is discussed before. Uh, Crunchbase is also a good source of information. Of course, I mentioned Dealroom, I mentioned PitchBook, I mentioned Crunchbase, I mentioned TechCrunch. Crunchbase is also one of them. And it is indeed a good source. But what I did not mention is that whenever there is an investment and there is a kind of press release or a news item which is published, and it could make sense to also look at this. Any other question for this before we jump to the other one, which is a bit longer than this, so we will be beyond time, I think.
Sorry, Joseph, I'll take, we'll eventually get the slides as well, please.
The recording, I think.
Okay.
Good. So going back to the presentation, we jump into the next half of the presentation, which is the investment landscape. Basically, the material I'm presenting here was a part of a research which we have undertaken under the GoToSpace Hubs project, where we try to let's say, understand what are the barriers to investments, and we try to understand what is the landscape for investments in the space sector. First of all, it is based on two sides. One side is a qualitative analysis, which is basically a secondary desk research. And we went through a few reports, but the main ones where we took some interesting highlights are a report from Bryce, update startup space, update on investment in commercial space ventures, which is a report from 2020 and covers investment from 2000 to 2019 and analyzes these investments. And the second report, which is also relevant and gives a more focus on Europe, although it covers also the other part, all the world, is from EIB, the future of Europe's space sector, how to leverage Europe's technological leadership and boost investments for space ventures. Both reports are available publicly, and you can just download them without even registering. And the second part of the work which was done was a quantitative analysis. We acquired data from Dealroom about the funding rounds from first quarter 2015 to the second quarter of 2020. And we try to make some graphs and to analyze this data and to see what we can get out of it. So first of all, access to finance, some conditions to access to finance for space companies, some challenges that the companies or the investors are facing. First, the European, like any other sectors, the space sector in Europe is facing some funding hurdles. It's not easy to get funding. It's like any other sector in Europe. And this is more, let's say, important at scale-up phase. So it's more difficult to get funding at scale-up phase than at startup phase. But this is the case in Europe for all sectors and not only for space sector. This we can say some real findings related to that is that the volume of VC investment in Europe is lower than in other regions like the US or China. There is much more money, much more VC in those two countries than in Europe. The venture capitalists in Europe invest with smaller tickets. So the same company like you who is in the US might get a bigger tickets. You will be struggling to find smaller tickets, for example. So this is unfortunately a fact, and it is unfortunately the situation in Europe. It is becoming better, but it is more difficult to get venture capital investment in Europe than in US or China. Growth capital is particularly hard to find in Europe, and business loans from commercial banks are almost not accessible because the banks are putting conditions, they are putting, or they do not want to take risks, or but it's not that developed than in some other countries. In space sector, the companies in both upstream and downstream sectors of the industry struggle with access to finance, but they struggle for different reasons. In the upstream, the companies face long development cycle, and they need a lot of investment to operate, and the market is limited, with which makes many business risks for them. In the downstream, the companies sell to emerging markets, with very often to governments, and to not really stable market, or to unsophisticated markets, which means that the market side is not demonstrated yet in these areas. The space ecosystem lacks investors with a space background and space investment expertise. Very often, those investors who are really expert in the industry are very small numbers. And we will see later on that newcomers are coming, but they still do not see or understand or have the same trust or know what to do with companies when they invest in those companies. So very often they just skip, and they do not invest in these in the industry. So as I was saying, many investors lack knowledge about the space sector, and they have false assumptions in their mind, like they do not have the right understanding of the sector. Limited size of European VC funds, and they do not want to take risks like their counterparts in the US, and which results in less investments and lower tickets for the companies in Europe. The investors, however, even though they cannot, there are less specialized investors. Investors should not be seen only to help companies with funding, but they can bring more than that to the company. Whenever they invest in a company, very often they bring some management, they bring some advisory board members who can help the company with their networks, with their with what they know about the market. Something the European entrepreneurs feeling is that there is a lack of private financing in Europe, and very often they keep an eye on other regions where they try to see if they can get funding there. So many space entrepreneurs are looking for private capital outside of the EU. And something coming into the game here is the new space, which brings some other types of investments, which very often have to deal with non-space industries, bring a little bit of larger funding rounds, and investors with some skills they have acquired in the other industries, for example. And this is developing or giving some hope to the space industry. Of course, where is public funding in all this? Very often public funding serves as a, I would not say a precondition, but as a step towards private risk capital, in the sense that when you get public funding, if you use it correctly, it can be a step in your development to show the investors that you are more ready, you are more advanced, and you are closer to the market, and it can be convincing for them. Here, a few barriers which are based on the market maturity and the sector risks. The space innovation have a longer development cycle than other technologies very often. And for this reason, many space entrepreneurs are looking for private capital outside of the EU. because European investors are not, let's say, taking the risk that they could take. But the new space, as I already mentioned, is somehow reducing this gap. Investors are mostly concerned with the market maturity, in the sense that there were some investments in the previous years, but we have not seen return on these investments yet. So we have not seen big exits or big IPOs, or where the investors will get back their money and they will make return on their investment. And we have not seen yet demonstrated, let's say, business models with generating revenues to pay back those investments. So in general, the investors do not clearly see the exit opportunities when they will sell their shares in the company and when they will get the return on their investments. And that's why very often they are careful about investing. Also, lack of follow-on finance. Follow-on finance is after you have a first round, you have other rounds, and other rounds you need money for other purposes and for other things. The lack of follow-on finance leads to very often some companies going to IPO very early. And when you go to an IPO very early, you don't make the necessary return, or you do not make the expected results. And it's not a good step. Before going to an IPO, it's better to grow correctly first. So several rounds of funding before you achieve this. This said, by some takeouts of the Bryce report, which is a very nice report. It is very recent, and it includes all investment rounds until end of 2019. Of course, it does not include public grants. It is private investments. Although when they talk about seed investments, it includes some let's say some accelerators funding, or some of the public funding, which can be shown as acceleration processes. In terms of funding amount in 2019, this is global. It's not in Europe. It was $5.7 billion as total private funding for the space sector. And this total funding was done by 328 investors, and it was done in 150 deals, and those 150 deals in 135 companies, which means that there are some companies which made more than one investment round in the same year. If we compare to 2018, which was at $3.5 billion, there is an increase of 62%, which means there is more private funding in 2019 than in 2018. If we look a little bit closer on the companies who have got funding, we find 4 companies on the top of the list, and those 4 companies will amount, if we count them, 1.9 billion for SpaceX and Blue Origin. OneWeb has raised 1.25 billion. Virgin Galactic has raised 682 million, and somehow 500 million from somewhere else to get an IPO. And all these totals 77% of the 5.7 billion, which means what is left is 1.3 million, which is only 23%. For all the other companies, which is for 132 companies, which means all the others are getting smaller amounts. Although you hear about billions, all the others are getting lower amounts. So 1.3 billion in 2019 for 32 companies. If we compare that to last year it was 1.6 billion. So although the total is higher, but if we exclude the four companies, the four biggest funded companies, we come to a lower amount this year, minus 17%. In total, I said it already, 135 startups, space ventures raised funding in 2019. In terms of number of startups, it's higher, it's bigger than last year. It is an increase of 34%. In 2018, it was 101. So there are more companies getting funding for a little bit less amount. I'm talking about private funding here, equity and debt. There are more companies, but there is a little bit less funding for them. However, there's one thing to take in mind is that there is a high number of undisclosed rounds in 2019. 38 rounds were not disclosed, so we do not know the amount, and they are not counted here. We don't know if it changes the game or if it changes the figures, but at least what we know is there. So this results into more companies, less amount, smaller tickets in 2019. From the report, some interviews with investors highlighted that there is a lot of money out there for space companies, but investors are still seeking companies with strong growth potential. So there is money, but they want to see that there is potential, there is a strong business model, some evidence that there will be revenues. If we look at the increase in terms of amounts of venture capital, we can see that the seed, prize, grants have increased by 31%. We see on the other side that the venture capital amount has increased drastically, almost doubling, increased by 95% from 2018 to 2019. This does not exclude the big four, of course. The total investment, when you combine everything, including debt financing and including public offering, it comes to 61% including debt and 67% without debt. In terms of numbers of investors involved in all the rounds we have mentioned, there is an increase in the number of investors, and the increase in the number of investors is higher outside Europe than, outside the US than inside the US. So more investors in 2019 from outside US than inside US. We have a graph with the number of US versus non-US investors, and we see that 2019 is the first year where the number is higher from non-US investors compared to the US investors, which means investments are growing. We are getting a growing international presence of investor. There is a surge of non-US startups which have been funded, 79 in 2019 compared to 47 in 2018. At the same time, the number of startups or companies, space companies from the US are just increasing by 3, so from 53 to 56. So the increase is more relevant outside of the US. If we look at the amounts that were invested in US or non-US companies, we can come to a short finding. There is $901 million total investment in non-US startups in 2019. It is an increase compared to 2018. China and Singapore alone received 56% of these 901 million. All other countries count for 44%, which is 396 millions. including Europe, including UK, including Canada and Japan and those countries. So guess how much is for Europe? It is smaller. Seed and venture investment in non-US space startups increased from 691 million in 2000, rose to 691 million in 2019 compared to $673 million in 2018. In terms of mix of investors, since 2000 to 2019, we count 967 investors investing in space companies. This is an increase in the number in 2019, which means that there are more investors, 38% compared to 2018. VCs and angel investors together represent 73% of the total investors. Corporations, private equity firms, banks make the other 28%. In 2019, 328 investors compared to 225 in 2018 invested in the 135 space companies and in the 150 deals that we mentioned. 205 of these investors are based outside the US. And if we look a little bit closer, 127 VC firms, 38 angel investors, 29 corporates invested for the first time in 2019, which means that there is new capital coming in the sector. There is fresh money. There are new investors probably who are more interested in the sector. And I already mentioned that there are more non-US investors in terms of number of investors in 2019 than US investors. But if we look at the numbers a little bit closer, 113 non-US investors, 40 are from China, 16 are from the UK, 14 are from Japan, and then the rest is 43. Part of it is for EU. So number of, we have seen this graph in a previous slide. It's the last 2 years where the number of investors in outside of US is higher than investors inside US. In terms of volume of funding, we see that the VC, the venture capital amount is getting higher every year, at least in the last 3 years. If we combine them with the seed prize grant, which is early stage, which is seed stage, it makes most of the private investments. I don't see many public offering. I don't see many acquisitions, and this is a sign that there is a lack of exits, and investors still do not know how to make the return on their money. Bryce report does not analyze, of course, public funding. As I already mentioned, it is about private funding, equity, and debt. But the report recognizes that there is an increasing role for public for governments in the space, as they act as enabling role. Very often they do procurement. Very often they are customers and they buy services. Very often they are source of direct funding, like grants, like whatever other scheme. And very often they are also a kind of stamp for approval, which gives confidence to private investors to invest in companies. And as we already mentioned, public funding very often serves as a step or a precondition towards private funding. Now, the analysis of the funding rounds from Deal Room we have the data we received. We received a data with 299 startups or companies, 154 disclosed funding amounts, and the others did not disclose funding, the funding amounts. But this involves 316 different investors, and the total investment rounds, 291 investment rounds. There were 12 exits out of these transactions. The total amount raised between 2015 and mid 2020 is about 1 billion, 1.05 billion. And there were, if we see 12 exit, 12 acquisitions, I guess there were no IPOs in this time. If we look a little bit on year, we see that, for example, between 2016 and 2017, there was an increase in the number of deals. We see that there is also an increase in the amount, although the number of deals have increased from 45 to 65. The amount has more than doubled, which means there was a gap. There was an increase in the tickets this year. If we look again on 2018, we jumped from 213 million to 241 million, which is 11% increase. So figures for 2020 are very early, and we don't have them. We don't know how 2020 will end with COVID, with all this situation. But in few months, we will do the exercise and find out. Some deals, top funding rounds for companies since 2015. We find Kinace, for example, company in France. We find TT Tech, a company in Austria. We find Aralis, which is in Ireland. We find Orbex, which is in the UK. We find IC, which is in Finland. These are the top funding round that happened in the last few years. And if we look at top investors, we find the public ones here. We find the European Innovation Council. We find Eurostar. We find BPI France, which is also a public agency. The Space Business Innovation Center in Norway, and ESA. All these are public. So in Europe, this analysis is just the investment rounds, including public ones, while the BRICE did not include grants and public investments. When we look at these big deals which were done in the last few years, Kinace, we see that it's an investment of 100 million, a company in France. And the most recent funding round was in 2020, February. And it was from BPI combined with BNP Paribas, which is a bank. If we look at TT Tech, it was an investment, total investment of 136 million. And we look closely here, it is more corporates, Samsung Electronics, Audi, GE Ventures, Infineon Technologies, although there is probably a little bit from Eurostars and from Eurostars, it's a grant from Eurostars, but most of these 146 million came from corporates only. So there is no VC, it's corporate VC arms probably. And this investment was in 2017. If we look at Aralis, an investment, total investment of 52.3 million. It's in Ireland, and if I look closer to who is investing in Enterprise Ireland, it's the same than BPI, but in Ireland. So it's a public entity. And you have Act Venture Capital, which is a venture capital, Kernel Capital, I guess it's also a venture capital. And the others, I guess it is venture capitals, but it's a mix. So the public entity is probably supporting the company, bringing it together with other investors, and probably leading this deal and making it happen together with others. And this investment was in 2017. If we look at Orbex, 38.6 millions in the United Kingdom. We look again here, it is high-tech Gründerfonds. It is again an innovation agency. It's the same than BPI, same, but it's in Germany. Why are they investing in the United Kingdom? I don't know, but it is worthy to go beyond that and to look why German public entity is putting money in a UK company. And again, it is with other investors, with ESA, another public entity, and they try to do the deal together, and probably they help the entrepreneur and they helped him in connections and in making it happen. If we look at the top countries by number of funded companies, for those companies who disclosed the amount, we find on top France with 24 companies. We have then second United Kingdom with 20 companies. And if we look at the amounts, it is just mentioned next to it, 600 million for France, 338 for United Kingdom. Israel 16. Israel is doing good on venture capital. They have a lot of investment, 16 for the country with 465 million. So with less rounds, they have more investment, for example, than the UK. And Germany with the 13 investments. Spain is the fourth country with 11 investments and 100 million invested. Top countries by number of funded companies, if we do not exclude the ones who have not, let's say, who have not disclosed the funding amount. No, sorry, here it's not by country, it's more by sector. We see that most of the companies who are getting funding are in a few specific sectors like transportation, like telecom, like enterprise software, like related to robotics or related to semiconductors. And this can be understood or not surprising as space technologies have high implications in location-based and navigation-based services, but also space technologies are also using these new innovation like robotics, like all the new artificial intelligence and all these new developed technologies. If we put on the map in terms of number of rounds per country, we see that, for example, France and UK are on top of the list with 38 companies successful rounds. We see that then next is Germany with 35 rounds, then comes Italy with 23, Spain with 20, and then we jump into other countries like Switzerland and Sweden. And of course, Israel is also in the race here with 21. The top countries by number of rounds. Again, we find France, United Kingdom, Israel, and Germany on the top of the list. And of course, you have the number of rounds for the other countries. And why France is identified as a clear leader is because I guess they have two different programs. They have a national program for all space innovations, and they have BPI, which was Macron's arm to drive innovation and to provide funding to those innovators. Both combined brings France to the top here. Per stage, if we look per stage, more or less 81% of the funding rounds have taken place since 2015 are rather on the early stage funding. And this means, or at least it confirms that the majority of deals are below 5 million. Um, and it is backed up by the companies where 212 out of 254 have received funding, because we have the amount of funding they have received are less than 5 million. And VC-backed companies that received funding between Q1 2015 and Q2 2020, we see that those who have disclosed their funding have said, most of them have said that they are backed by a VC firm. So most of them are backed by VC firms. If we look at the total investment rounds, and we try to put that in grants, Series A, Series B, seed, early VC, we try with the 254 investment, 78% has been provided equally from grants as well as seed. So grants here and seed together make 78% of the total number of deals, which means that the scale of funding in Europe is limited in supply. So it is harder to get scale up funding than early stage funding. Again, if we look at where the funding is going per business model, we see that most of the companies invested in say that they have a B2B business model, which is a kind of typical in Europe and probably for many space companies who have received funding in Europe. Some of the exits which were made in the last few years, we find Nano Avionics, which was acquired, so acquisition for 14.6 million euro. It was acquired by AST. We see that AAC Clyde Space, a UK company founded in 2005, which received 1.7 million pounds investments from a Eurostar program, was acquired for 35 million euros. These are not big amounts for acquisitions, and probably it's I don't know why they sold at this stage, but they have their own reason. Cropio was acquired in 2019 by Syngenta. Syngenta, Cropio is doing remote monitoring of agricultural land, and Syngenta is in the area, so they just acquired the company probably to get the IP, to get the technology, to get something out of it, and they did not disclose the amount. Oralia, a company in France, who got a total funding of 43 million euros, got acquired for almost the double, 88 million in February 2016. They are in positioning, navigation, and timing solutions. It is time now for questions. And sorry, I have been much longer than what was expected.
But actually really interesting, Yusuf. We have a few questions in the chat, Yusuf. I think from Jens, maybe related with the topic from the beginning.
Where is it?
It was Jens Werbeck. He was saying if there is a list of space tech investors, including deal sizes.
I mentioned it. You can get access to that. We had to pay the room to get it. So all these funding funding round. We have an Excel file with that, when, which investors, the amount, if it is disclosed. But I'm not sure, according to the conditions of D-Room, if we can share that. I'm not sure if we can do that, but obviously, if you look, probably if you go to Crunchbase, you can have access to it, and you will have almost the same information. D-Room, you have probably to pay a subscription. I don't know if you will need to pay the same subscription than us, because for us, we needed to extract data and we needed more, but I think you may have a lower subscription for that. Otherwise, in the report from the EIB, they mention some investments, they mention a few things. It's not complete. It's not everything you need, but I would say start by looking at what you can do on D-Room, what you can do on TechCrunch, and you will find your way from there. Well, letters of intent, that's where we...
Yes, these were questions from Ivan, but I think more regarding the program itself than about the presentation. I don't know if anybody else has questions about what Yusuf.
Well, there is a question based on all the investor events that TechTour has facilitated to date.
Yes.
What exactly are the investors looking for? Does TechTour have template of letter of intent? So first of all, what investors are looking for is to invest their money and make return on their money. So I mean, investors, let's say there are several types of investors. If you look at institutional investors who are public, very often the public investors have an interest to support innovation, but to bring their money back, while private investors have an interest to make return on their investment. So what they want to do is to make sure that they select the right company who will grow and who will make money and who will bring back the money that they have invested. And very often what you need to keep in mind is that investors often invest in a portfolio and not in one single company. Why? Because they take risks, and very often the company is not making the expected return. So with the portfolio, even if one brings a big return, they cover what they are not getting from other companies or what they are losing from other companies. So basically what they want is to get the right business model, the right, they want to make sure that you will grow and you will bring back their investment. So they look at your market, they look at your team. Do you have the right management, right advisors, right a structure in place? They look at, for example, is it the right structure to make the growth that they expect? Is the market there? And is there a potential that the product or your business will make profits and pay back their investments?
Thanks, Yusuf. And by the way, sorry from just jumping into the ether here, but I'm interested to be more specific, right? Of course, companies, investors, they look for the horse, the jockey, and the race, right? Good horse, great jockey, size of the race. Perfect. And it's always based on future value, right? Invest now, double up later. But I'm interested because we're doing one of the programs, and we set out some fishing lines and we have a bite. So some pre-sales coming up, and I'm interested how far I have to push these potential clients to, you know, because it's not worth to say I had a sales meeting with a client, right? That's worth nothing.
I would say
you want sorry, you want the LOI on paper saying, you know, X amount, so many years, and even though a letter of intent is non-binding, but it's still better than nothing.
Yes, but usually the investor who is investing in a sector knows the sector. He can assess your business model. He can assess if your product can be sold. He can, um, I mean, he will not invest if he doesn't see where your product is going to the market. If he is not confident that you will do it, he will not base his decision on a single client, for example. If you have a single client, or if you have a couple of clients, is that a kind of recurring revenues? Is that he will look at your business model and he will look at the market before looking at one letter of intent. Of course, one letter of intent can help you.
Yeah, it's okay. Yeah, we are what's commonly referred to as downstream space tech. So we don't do any space stuff, right? We catch the signal down on the Earth, and so you know, I don't know who from the old, like you know, you were showing great examples here, but that's not us, right? Of these, you know, nano satellites, intricate things. So, but I mean, okay, obviously I agree with you. The investor would know the market.
He will know the market. Probably he will help you. He will advise you if he invests in your company, and probably it will be already in his mind. Why shouldn't he sees more than you what is the potential, and he will try to make conditions which are advantageous to him, and try to give you advice later on so that your company can grow. But I would say it is more on the business model. It is more on the potential of the market. It is more on your capacity to bring it to the market. And if you have a letter of intent, that is good.
Yeah, of course, that's validation of your business model. You know, your business. That's the client says, "I'm going to pay you the way you want to be paid."
Yeah.
Basically. But so I totally agree. I'm just wondering, you know, I guess grasping for successful examples or templates of, like, you know, what should be put in there, because these are if you're talking to you know, medium, large, or even enterprise corporates, you can only have this conversation topic so many times, right? And then you grasp the opportunity or you didn't. You know, did you end up with a 50K pilot, or did you say 50K pilot and all your business in the future if we achieve ABC, right?
Of course. But I saw something about a template for letter of intent. But if you look on Google letter of intent, you should be able to find something. No?
Yeah, I'm sure, of course. But I, of course, took the opportunity to ask you because you have more knowledge than Google on this topic.
I have already asked for letters of intent when we are applying for projects, but you keep it loose, where they are not really committing, but they are saying we are interested. But in your case, I guess you want commitment from them, so you have to phrase it a little bit different. You have to phrase it as if it is a contract almost.
Yeah, it's a double-edged sword. At least in my opinion. Maybe some founders here in the chat or call disagree, because first you want all their business. You know, you want to be an integral part of their operations with your client. But then when you get to the doorstep of delivery, you realize that if you don't deliver and their company stuff, you know, their operations fail, that's a really big pressure. So actually the sweet spot for early stages to be like mission critical, but not really, because if you have some delays, then your customer or your dealer that's selling to the customer is not in a really disadvantageous position. This is really important. I've seen startups, scale-up struggle, and you know, it's the reputations can be damaged like that. Anyways, thanks. Yeah, I know what I need to do with respect to letters of intent.
Good.
I think we have another question from Marco at the chat, Youssef. Marco Pavan.
Why do you think it is so difficult to find a competitive business model for space companies, especially in the small sat market? I didn't say that it is difficult to find a competitive business model. I said that with the new space, business models are, let's say, evolving, and we are seeing some results. But what I did say is that investors are still waiting to see success stories or revenue generating business models, or to see evidence. I think I mentioned that there is something like several billions waiting, and investors are not investing them because probably they are waiting to see some evidence where the market is going. What are the success stories, just to see um, some proof that what is promised will happen. There are, of course, some interesting business models, but you need to find who are the customers. Are they really bringing the revenues you are expecting?
Does anybody else has questions for you, Seth?
No, not at the moment. But I liked Ivan's question. So it was interesting.
And I also found it interesting, the presentation, Yusuf. Even we work on the deal room data for a long time. I hope it was interesting for everybody.
So it was. So basically, as a summary, we have to have at hand or business plan or speech, no, or pitch deck and value proposition, something like that. What things I can't mind right now?
Pitch deck, that's first thing that you need for sure. That's
yes.
Every investor, without telling you good morning, he will tell you, where is your pitch deck? Okay. I mean, this is the first thing that he will look at. And then if he has some interest or whatever, he will ask for more information. And the more information comes gradually. It goes up to the business plan to show exactly more details on your business models, things that you will look at, almost to be able to do a due diligence. An investor will never invest in something without doing a due diligence, trying to find exactly information from other sources about your company, trying to find about your business model, how he can make or how it can work for him, trying to find evidence on what you say in your business model outside of what you tell him. He will always do this exercise if he has an interest.
Okay.
So he needs more material from you, he needs other sources, and he will go and look into those databases, what funding you have got, who invested into your company. If he sees all that, he will investigate in all that.
Okay, but your first contact is going to be your pitch deck.
Well, sometimes it depends, because previously you were meeting them at an event. It was an elevator pitch. It was even shorter than.
Keep it short. No, just 2-3 minutes and get it done.
No, elevator pitch is in 30 seconds, 1 minute, to tell them who you are, what you do, what you are looking for, and why you are better than others. And it's very short. And then he will tell you, oh, can you send me your elevator pitch? Or no, can you send me your pitch deck? After the pitch deck, oh, can we go further? Can we have more information on your business model or whatever? And he will start.
On the pitch deck is when you can include your presentation or some kind of. See?
Yeah, exactly, Manuel. The pitch deck is the presentation.
Thank you very much. Really interesting.
Good.
I think we have a final question from Simon. Right, Simon? Would you like to address it to yourself?
Some equity investments versus convertible loan. I do not have figures on that.
All right. And from the perspective of like funding strategy, so
well, I think
for a company, for a startup,
I think it depends on your discussions with investors. Very often they, when they have a doubt, they will try to give you a loan. And well, if we see that certain milestones happen, we will convert it into an equity investment. But they want to get some evidence on that it can work, or and we do not have figures. Okay, what was promised as a convertible loan or investment, equity investment. But very often when they do that, it's because they want to see some milestones before turning it out into equity. You are muted, Simon.
Thank you, Yusuf, for your input.
I have not seen any figures in any of the reports or any of the places.
All right, no problem.
Okay, I think it has been a really interesting webinar. It took almost 2 hours, not one, but that means that the conversation it was productive. I'm happy to see that this happened, and maybe we could finish here. I just wish to see you all again next week on Thursday at 4 p.m. Central European Time. We will have an amazing webinar as well by Paul Gillespie, and about the team, also a really important figure when developing a startup. And with that, I think the Tech Tour team, Yusuf, Milena, and myself, we wish you a great evening.
Thank you very much.
Thank you all.
Thank you all.
Thank you. Have a good evening.
Thank you very much.
Yes.
And see you next week.
Thank you.
Bye-bye.
Teresa.
Bye.
Bye-bye.
Ciao,
Bye.
Timo.
Bye.
Ciao.
Bye.